Hello, I'm Lelda Smits for the Finance News Network, and joining me from ASX-listed 360 Capital Group is the fund manager for the group's listed industrial fund, Ben Butler. Ben, welcome to FNN.
Thank you for having me.
Now, could you start by explaining who 360 Capital Group is and how the industrial fund fits into the context of the business?
Sure. 360 Capital Group's a diversified funds management and co-investment group based in Sydney, specialising in Australian real estate. The group has total funds under management of approximately $1 billion, which includes the ASX-listed Office Fund, or TOF, and the Industrial Fund, or TIX, which is currently the group's largest fund. In addition to these two listed vehicles, there are also a number of unlisted closed-end funds. The 360 Capital Industrial Fund, or TIX, which I'll be talking about today, is an ASX-listed real estate investment trust with the sole purpose of investing in stabilised, secure income-producing Australian industrial property. The fund has a current market cap of about $200 million and is included in the S&P ASX 300 index.
What are some of the characteristics of the assets TIX will look to invest in? And can you expand on your portfolio, the assets in the fund, their location, quality and mix?
Sure. So TIX has a very clearly defined strategy investment focus. We'll invest in generic industrial logistics properties. We won't, however, undertake development in our own right, nor will you see us go offshore. The properties are characterised by strong defensive, income-focused fundamentals such as high occupancy, long leases and fixed annual rental increases. The fund holds a well-diversified portfolio of 18 assets valued at $358 million, located across all of the mainland states of Australia. The portfolio has a core portfolio occupancy of 99% and a long WALE of 5.4 years. In addition, the portfolio has a diverse tenant base with household names such as The Reject Shop, Visi, Hugo Boss and Kimberly-Clark.
So what do you see are TIX's biggest advantages compared to its peers?
Well, TIX can provide consistent and growing income and capital returns from income-producing assets through exposure to the industrial sector without the risks associated with development, land banking or investing offshore. At current pricing, I think TIX offers investors a sector-high distribution yield of 8.4% versus larger REITs in the sector, which is around, at the moment, around 6%. We pay our distributions quarterly and are forecasting a tax-deferred component of around 40 to 50% for the FY14 year, making it a very attractive proposition to the retail investor. And I think another point of difference we have over our peers is that 360 Capital has a significant co-investment of some 15%, which demonstrates a clear alignment of interest between us as the manager and the investor.
Okay, Ben, if we can look at your performance now, how has the fund performed over the past year and how did this contribute to the fund's half-year performance?
Well, since listing the fund in December 2012, we've delivered a total return of 36% to our investors up until March of this year, with a 14% growth in earnings from the previous corresponding period for the first half of FY14. The fund in the last 12 months has acquired 40 mil of new assets and we've recycled out of about 20 mil of non-core assets. Strong performance on the leasing renewals has also contributed to the fund's half-year result. And this has enabled the fund to provide value to unit holders, evidenced through two earnings upgrades over the last 9 months, primarily driven by underlying portfolio performance. And furthermore, in April, we had our portfolio revalued, and this has resulted in a 15% increase in our NTA. So our NTA currently stands at $2.23.
Great. So what operating earnings per unit have you forecast for the full year?
Well, we're currently forecasting full year earnings of 20.5 cents per unit and distributions of 18.6 cents per unit. And on current pricing, this represents a full year distribution yield of 8.4%, which when you consider alternative investments represents a pretty attractive proposition.
So finally, Ben, where do you see TIX in 12 months' time and what is your outlook for the industrial property sector?
Well, we would like to see the fund continue to grow to provide consistent and growing returns for investors. And that growth will come from income growth with fixed rental increases and active releasing and new acquisitions. Well, the outlook for industrial property in Australia remains positive and offers some of the highest yields in the sector. Tenant demand remains high and vacancy is forecast to remain stable. The investment market will continue its hunt for yield and long leases, and in our view, TIX is well placed to benefit from these favourable market metrics and opportunities.
Well, Ben Butler, thank you for the introduction to 360 Capital Industrial Fund.
Thank you for having me.